GKFX Prime presents the Market Analysis Webinar.
Hello traders and welcome to another video. You know what time it is. Yes, it's that time of the week again, breaking down the charts, giving you analysis of the week ahead for the markets, analyzing at the opportunities available to us, looking at what we've got in terms of high probability opportunities, what the market is giving us. My name is Dima, and as ever, I will be going through with you this week the analysis on the charts that I see on the high probability setup. So, hope you have had a good trading week last week. Let's get started on this week and let's see what we've got. As always, I am going to start with the calendar for this week, and here's what we've got going on this week. Monday, we've got on the pound GDP figures that will be potentially a major news to watch out for. Tuesday, we've got another big news to look out for, CPI numbers from America, so that will be dollar related. Wednesday, we've got on the pound from the UK CPI numbers as well. We've got less important PPI numbers from the US and GDP figures on the New Zealand dollar from New Zealand. Thursday, Australian dollar, the employment numbers there, and again from America retail sales, and on Friday inflation figures. So these are the ones I marked out as the big ones to watch out for the week. Let's see how it measures up with what we're looking at this week, and if we can fit that in with some of the setups that we're looking at. So let's get to it. Here are the charts. We've got 7 charts here, 7 markets to look at. Let's see what we can find and break these down for you, help you out. Right. Let's start with the big forex pairs to begin with, and the biggest one for this week I've got is the euro pound. Not one I would usually look, because euro pound, as you can see, over many weeks can be very choppy, can create unexpected moves, and personally not my favorite one. I would say one of the least favorite ones, if I was going to be very honest with you. But this week that could be an exception, so I am going to have a look at that for this week. So here's what I'm seeing. We've got a easy level to see here to watch out for, and the previous weeks we have very bullish momentum, clear bullishness to see in the market, but with the last week we did not quite hit that high right here of 0.8720. So I would look for the continuation for that next week as a minimum into this level, and possibly beyond. And beyond means I'll draw a fib from the high here to the low, and we've reached the 50 level. I'm looking for the 61.8 to be the next one to go into. So that is about 130 pips away. Let's have a look on the 4-hour chart. You can see we just missed that, so I'd look for it to continue. If I draw a fib on the current move from this major low to this major high where we're at, I'll be looking at this zone right here, which is the 61.8 and 78 fib. Let's delete that to take the buy from in terms of high probability level, and of course this would be a point of invalidation, nullification for the whole setup. So I'd like to get a nice cheap price to get into here and then move away, create a price action to move into this level, which would be 100 pips away, and then the next level after that will be another 130. So a good 230 pips move there potentially. So that's what I'm looking at on the euro pound. See that clear bullishness closing higher and higher each time. Okay, let's go to the next forex pair. I've got pound yen here. Now pound yen, if I go to the weekly, what I'm seeing here is after this very tricky, very choppy movement of a downward retracement here, retracing this whole move. We can see we have many wicks to the downside, and finally the market popped and indicated the direction, indicated its direction. For me at least, that's a sign. So the next level I'll be looking at is up here to reach into. If I zoom out, you can see we have this very large movement over since 2015. So this is a very big macro picture, isn't it? But let's look at that here. We've got this very deep retracement coming here. So I'll be looking at this level as the next target. And now looking at the 4 hour. In fact, let's have a look at the daily. I think it's a cleaner picture, less choppiness. So we've got this level here that we just bounced off from. So now I'll be looking for another opportunity to enter into the long and capitalize on this move higher. Now, of course, as ever, we want a nice cheap price in the market. And what's the cheap price? Well, you can draw the fib from this move low to the high, and I can see below the 50 level would be a nice retracement, and below the 61.8 would be even better. So that's a nice deep retracement. There's quite a fair few pips, 250 or so pips to go before we actually reach this zone. So not yet, a bit early days. Let's see what happens during the week. Perhaps this will merge with the pound news this week to give that retracement. However, that might not happen. We just may move higher altogether. Never know what the market's going to do. But the high probability scenario in terms of entry, in terms of looking for the best risk reward, would be this zone right here. And of course, I'm not looking for the market to invalidate, go below here, because that would be the validation area. This is where we actually made a move from. Yeah, so that's the idea on the pound yen at the moment, and that's what I'm looking at in terms of the high probability. May need some patience here, may have some choppiness. It may take a little bit of time to make this retracement down because it's a lot of pips. However, saying that, yet again, if you look here to the left, we've got these 3 days, and in 3 days we moved 450 pips. So pound yen is a big mover, moves as fast as a Ferrari, so if not faster, then you really want to watch out for that. So it could happen quicker than anticipated. Entirely possible. That's pound yen. Okay, next one, I will look at another pound pair. Let's look at the pound Aussie. Again, let's have a quick look at the weekly, and we may want to zoom out on the monthly, in fact. And we can see here we've got this several months of downward movement, and the market is not relenting, is it? Looking on the weekly, again, bearishness. We had this neutral candle, but ended up with this wick to the upside. 2 weeks of bearishness, and again, previous week attempted to go higher, but it had this very long wick to the upside and closed bearish, quite obvious to see. So I'll be looking for a continuation of that into the lows, and then possibly into this low right here, and target towards that, which is about 150 pips away. So looking for that to continue into its bearish momentum. Now the question is where to, and where we're gonna look for the high probability scenario. So again, I'm gonna draw a fib from the current move down, and as ever, be nice to go above the 50 level. We may not do that. We may just fill in this price gap right here, and we may see a reaction of that. So depending on the price action, in this case, we may not reach the 61.8 because we've got this structure to the left here as a zone of possible resistance, which will be the 50 level. So in this case, I'm going to see which one it reacts from, and then go from there. If it does that, it may just drop as well. So from here, high probability scenario area from the 1.7 into these quite clear to see lows would be 130 pips, and perhaps even lower if the move works out, holding another over 170 pips down to this marker point right here. So that's the outlook on pound Aussie. So again, similar to pound yen, we've got a bit of downside probability and the bias to the sell. So bearing that in mind, both pound pairs, both idea is selling the pound. So may want to be a bit careful there. We've also got Aussie news. So a few factors to bear in mind and to manage the trade based on that. Okay. All right, let me move on to the next one. So let me go to gold next. All right, I'll just have a look at the monthly. You can see the monthly chart. We've got very bearish momentum here. I'm looking for a possibility of the market to reach down to these levels right here, as marked out previous week. If you were with me, you may want to go back to the video and review that if you like. Last week, we had this indecision candle, closed slightly bullish, however, not very effective, not very strong, and I'll be looking for that continued bearishness. So looking on the 4-hour, here's what was expected. So this move last week that I drew out expected came to pass. So we had this move into the zone and a sharp move away. And the market did not want to reach the lows. It actually reversed again and then came back for the highs again. So an interesting one, maybe a tricky, and may have tricked a lot of people. However, let's just zoom out here and look at the daily time frame, the bigger time frame, and you can see this zone here where the market kept closing below, leaving these wicks, indicating that we are now still, I should say not now, but still as of last week, bearish. And despite this move, a higher attempt, move higher, it was a failed attempt, and then now it looks like we are back in yet again after this ranging days into possibly bearish territory, and that would be the preferred outlook here in terms of probability. So let me just delete this and let me just start again. And this is what I'll be looking to see. So if we've got the downside momentum breaking this low, and we break that low, and then we come down, and then we create a pullback, get a better price, and then continue to the downside, this would be the favored scenario in terms of probability, in terms of looking for the market to make a move to show us what it wants to do, and entering it based on the game being in our favor, so the cards being dealt in the way that we'd like to participate in. And that's what I'd be looking at for the moment. So this level, once again, I'm still going to look at that, and I will pay attention to the low right here, because we may have a reversal off here. Let's see if it does break down below that, then great, and I'll be looking to target that next level, 1661, and if not, then we'll see what happens. We may range and we may even just head higher. So gotta really take into account all those probabilities and scenarios. Now this level would be the invalidation point. So if we do go beyond here, then this whole idea is no longer high probability. We now may see a move to the upside and the market break higher. Yeah, that is the scenarios on gold here, and that's what I'm seeing for the moment, unless something changes. Okay, next, let's take a look at S&P. So this has been one that we've been looking at for a while. Once again, last week I did look for the market to reach into this area, which it did. We weren't looking at any buying scenarios because this was part of a retracement. That was possible to capitalize on it. You can see there's a retracement here. The market headed higher sharply, and now we are turning into the scenario that I looked at originally, that we saw together, which is the move into this zone and then a move away. So now we're beginning to see that creep into that area, into this retracement area, and then we'll have to wait for a few a bit of price action in the market again to tell us what it wants to do to create a reversal pattern to come in down to the downside to possibly firstly this low and then these lows. So a big move here, but we'll see how it works out. Let it play out and let it give us that scenario in terms of a reversal pattern. So that's what I'm looking at as a high probability scenario. Had to exercise a lot of patience here because, well, the whole week was just a move down and then that bigger time frame retracement, and not look for any buys there. So we've now patiently waited, and maybe it wasn't last week, but it could materialize itself this week. So let's see how it works out. This will be a zone I'll be monitoring, and then we'll see what happens when we get there. Now, if we push higher, of course, let me just go back to the 4 hour. Pushing higher, of course, this will be the place of invalidation. And if we get the market moving higher, then this whole thing, this whole idea breaks down. That's the outlook on the S&P. Okay, next I'm going to go to oil. Let's leave Bitcoin to last as usual. So here we are at the zone that was expected from in the last few weeks that I was looking at. We've gone right into it and rejected hard off it, as you can see, very hard into it, and then moved away very sharply. Looking at the 4 hour, as expected, here was the zone where I was looking for the market to move away from and to continue its downward momentum, which it did last week. So now I'm going to delete all these which are no longer paying attention to at the moment. And now let's have a think about where we go from here. Now, looking at last week, we still closed bearish, weaker than the week before. However, we're kind of neutral candles, so not yet confirmed bullishness from this zone because we're not yet had that momentum on the higher time frame. So looking at the daily, you can see that we are now within this zone, and now the question mark is, where do we go from here? Are we going to have a range of movement? Are we going to come to the downside? Or are we going to bounce here and then head far higher, perhaps to these highs up here? So the idea is, as with the other charts, is we don't know, and the market hasn't yet shown its hand. Now, what I would like to see as confirmation in terms of increasing our probabilities is a break of this level. So this would be a structural swing high, and then a break of that, the daily time frame, retracement into a nice better price, and then the continuation up would be the preferred scenario. Now that's in terms of a bullish move. Now in terms of a bearish move or another possibility, I don't know how it's going to work out. Now we might have some hesitation here, maybe some uncertainty, some choppiness, so really not pressuring, not forcing any move here, because we may see some uncertainty and some ranging movement as it happens usually when we come into major levels and major zones, and really want to wait patiently for that to happen. Now, of course, if we have a range, if we have the market moving sideways, then we don't do anything. Nothing's been shown, nothing's been dealt. However, there's the alternative scenario. The alternative scenario is we may head lower still. Now, if I draw fib again from high to low, you've got the 61.8, and now I can see the 78 level right here. So we may go lower still. There's that possibility. Now let's account for that possibility and see what would be the case if we do that. Well, if we do head lower and we don't breach these highs, then a break of the structural lows here would be an indication of a possible lower price, and then a pullback into a nice better price back into the zone where we marked out would be a possible high probability scenario to continue down to this 76.5 dollar mark. So that spot price there would be the next place I would focus my attention on in terms of a high probability target for the sell setup, sell scenario. So that is the case here. Yeah, this one I'm going to be careful of, not going to be rushing into this oil idea, because as you can see, the week ended maybe bearish compared to the week before, but still this long wick to the downside, not liking that. It's indicating that we may have a bit of stalling action, a bit of uncertainty, and it's going to be a bit of a one to watch for in terms of patiently seeing what we're dealt with in the market. Okay, gonna wait for this one. Right, so that is oil, and last but not least, as before, Bitcoin. Okay, I'm gonna go to the monthly again. Let me just go back into what I was looking at originally. So originally I was looking at this area right here for the market to head into, which we have been doing on the weekly. Previous weeks have been bearish. We reacted off this level, bearish, 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 and then the last week we closed bullish, reversing some of that downward momentum. Now, the thing is that we've reached this level. However, we've not broken through. We've had this initial reaction, and now the question is, are we now bouncing off and heading higher, or are we going to be stuck in this range, or are we going to be breaking down and heading even lower? Now, if we head lower, let me have a look here. What I'm looking at is I'll be looking at this level right here as a retracement, further retracement into the 14. I'll take a safer number, 15. It's a nice round number, 15 level, and there's that possibility that we're not finished with the down move yet. This is another scenario, just like oil, where we're reaching a key point, a key price point where we don't know where the market is going to go from here. And because we're in this, you can see a very large range on the daily, we're not broken lower. It's tricky to say where we're going. However, what I can see here is that you can probably see it yourself, very obvious to see that we have massive force to the downside. So the downside, if anything, would be a favorable outcome. Favorable in terms of probabilities, I would say, not even outcome. So the question now is, where do we go from here? Well, let me delete all of these. Just get rid of all of that. We were looking at lower prices last week as well, and we had that very big move, very big downside move. So the question is, where now? So if we are indeed going to react off this level that I marked earlier and get that reaction, then perhaps after the reaction, going to look for a pullback, a nice, more expensive price down, back down into the bottom of this range here. Now, a better price or a better place to short from and look for that idea would be this zone here. If I look on the daily, you can see this obvious gap in the price. And in fact, if I just stretch it, go left, you can see this area right here. So we may come into this area, be a nice area to short from there as well. So a move higher and waiting for price action and coming back down to the lows of the range. Now, after that, who knows? Maybe it'll hold, maybe not, and maybe we have a further collapse down into that 15,000 level. I don't know. We'll just have to see what the market tells us and what it indicates. So again, not a very favorite setup, not the best one for the week, I would say, because at the moment it looks like we're in a big, fatter, high time frame range, and we really want to pay attention and respect the high time frame idea. It's a you can call it a kind of sign of wisdom, you know, of age. That's the higher time frame power. Yeah, that's where we're at the moment. We're going to really see some very clear price action here, very clear reversal patterns, and then I would look for a possible lower time frame, 4 hour and even maybe 1 hour entries to get the best possible risk reward and entry point. Yeah, so that's Bitcoin for you here. Again, I'm going to mark out a very point of interest, which would be this structural high here. If I go to the weekly, it might be a bit more easily visible right here. And if we break that, then I would reconsider this whole scenario and possibly Bitcoin now making its big move to the upside. So not discounting that, we'll just have to wait and see how it goes. Right, so yeah, that is Bitcoin. So remember, guys and girls, trade carefully and manage your risk, as we keep mentioning, and choose your setups carefully. I've given you some options here for the week, and pay attention again to the calendar. Go back and check the timing of that before you enter your trades. So hope these ideas help you out. Hope it's provided a little bit of clarity on the markets. If you haven't got your own, remember to subscribe, comment down below, like the video if you got some value out of this, and hope to interact with you and see you on the next week's analysis. So as ever, my name's Diva. Thank you very much for joining me, and see you next week. Have a fantastic trading week and be well. Thanks for joining me. Talk to you again soon. All right, bye for now.